welcome out to the week ending of July 24th, weekend review and playbook prep. This is our part of our market analysis and preparation for the week coming ahead. We'll run through some charts, share with you guys what we're seeing. At the end, we'll go through maybe a list of potential stocks that we're keeping our eyes on. Let's go ahead and jump right in. You can see our market gauges. We are in an adverse market. We rotated this on Friday as on the S&P 500 price closed for the second day in a row below the 50-day, and also after having some early morning strength, sold off when it neared the 50-day moving average. And so if you don't know what the 50-day moving average is, that's the price of whatever ticker chart stock we're talking about over the last 50 days, sort of the average. So above is typically a bullish idea. Below is typically caution in our framework. We also like to look at the intermediate trend, which is going to be price versus the 30-week moving average. So 50 days here, 30-week moving average would be, synonymous with maybe the 150-day moving average. So you can see a longer time period of looking at price. And then our short term, which is the 20-day moving average, has flipped to bearish this week. Also, you can see a little bit of the history down here. We've really been kind of flip-flopping back and forth, but we've been in this neutral market now for really a couple weeks, and it's just been uncertain. So finally we flipped the gauge over to adverse, and the sideways market, the chop, this is the toughest time to be able to manage money if you're not just buying and holding and sitting on your hands and just letting whatever happens. It's a lot easier to manage money when the market's going up. It's a lot easier to manage money when the market's going down, because you can just move over to cash and have a solid defense. But when things are going up, down, up, down, up, down, up, down, inside of a range, and high volatility inside of that range, it tends to be a little tougher. So, but these time periods usually don't last very long. Usually the market will resolve one way or the other, either up or down. So that's really the situation that we're in, and we can't say that we're in a completely defensive time frame for the market right now. We have to kind of, probably say that, it's on the edge of really need to be defensive, but the market can just turn right back up. So let's go ahead and, we'll just look at a couple of these things for the week. The ultra aggressive was down 2.11%. The aggressive down 0.63, moderate aggressive 0.61, moderate 0.5. And you can see the S&P was only down 0.59. So some major underperformance for the ultra aggressive. But start looking at the Qs down 1.6, the NASDAQ down 2.09, the MAG 7 down 5.62, and you can kind of understand, how tough this, environment is. And these have been flipping back and forth every week. Which one's been leading? Which one hasn't been leading? Right? So you can look at the MAG is down 1.79 for the month, and look at the Qs down 7.8. Look at the NASDAQ. Right? So it's been very, very, very challenging market the last couple months. So, but let's go ahead and look at some charts. Let's look at the intermediate trend. We're looking at price versus the 30-week moving average. We've talked about this before. We've run the stats, we've run the back tests, and we've seen from a quantitative approach 56% of the time when the market is above the 30-day, and we have an up day, right? 45% of the time we'll have a down day. So the idea here is you're going to have more up days than down days, right? And so we want to still be mindful and positioned to take advantage of these up days, right? We want to have the odds in our favor. We want to have the wind at our back, right? And so price above the 30-week is definitely one of those time frames where the wind is going to be at your back. So it makes sense to take chances, to take shots, right? To be in the market. And one of the themes today that we'll talk about over and over again is really lining up the probabilities in our favor. So if we were to really think about how we structure our methodology here, is that we are looking for the leaders. We are looking to outpace the S&P 500. We are looking for the stocks and the themes all to line up in one direction. And so the market's kind of that first direction. So we have a bullish intermediate trend. Problem is when we don't have a bullish short-term trend right now, right? We go over to the short-term trend, like we just talked about, we are bearish, and price is below this green line, which is the 20-day moving average. And you can visually just look at the chart and see the chop, right? So we don't have complete alignment right now. So this would normally put us in an uncertain market, but when we kind of have price come down, support the 50-day, move up, and then break back down, this is an adverse style market. It doesn't mean that we're just going to sell everything, go completely to cash in all the portfolios. That wouldn't be smart. That wouldn't be prudent right now, because the intermediate trend is still bullish. So these can just turn back up, at any moment. We have some kind of headline news. We have a change in the conflict in Iran. We have a Fed speak, right, come out, and all of a sudden the environment changes. There's no trend down that we can just set aside and have the probabilities in our favor that we miss. So we're kind of in the middle ground right now. Okay, so here's the what we would call the broad market. We have all the tickers up here, and if we look over here, here's the S&P 500. And we can see, we were just looking at that. If you look at the blue dot, right here, the blue dot. If you look at the blue dot, we are below the S&P 500. The mags, look at how far the mags dropped. I mean, red flags, stay away from big tech. Now, the interesting thing here is we're looking at the mag 7, which is those 7 big names. We'll look at them individually later on, but comparing them to the XMAG, which is the S&P 500 minus the Mag 7, and doesn't that chart look a lot better? So even though the S&P 500 is below the 50-day, you can really look at the idea that AI stocks have been kind of pounded recently. You got the Mag 7 definitely getting beat up, but maybe the rest of the market is holding up. So part of the weekend routine is to see where is that strength actually in the market, and if we find that strength, can we position ourselves in it at a lower risk and have the ability to maybe take advantage of some upside. Now, I will tell you, there's also, even though other parts of the market might be working, there might not be enough juice to really make much money there. So sometimes the market, and it's because of the way the funds are typically set up, they have to stay invested. So when things are a little tougher, they may rotate out of the high-flying names, the tech names, the consumer discretionary names, and they may just shelter their money in some of these defensive names, pushing price up a little bit, but not really pushing it up enough to really put money into them and hope that the investment pays out. In fact, a lot of times by the time we get into them, the rotation might be moving right back out of them. So we have the ability at Peak Horizons Capital to go to cash in our portfolios, because we're not in this kind of box of the investment style has to be only tech or only growth or only value. We have the ability to rotate around. It's one of the advantages of being in this style of management and being able to be nimble. So sometimes it just makes sense to park some of the money in cash and just wait out the volatility, which tends to really be our play, right? But so we look at these different things and we make decisions. This is the NASDAQ. You can see the NASDAQ right here, the little blue dot above my, whatever that's a cursor, the plus sign. And you look at the chart of the S&P 500, the NASDAQ, and you compare it to the 50-day, right? So this is worse. the Qs are worse. Look how far below it is below that red line. Visually, you can see things. Now, two areas that look like they're holding up decently, but they've also been very choppy when you look at the chart is MDY, which is the mid caps, and IWM, which is the small caps. So you're kind of in a situation of where do I put the money, right? Then what we can do is we can also break it down even further than this. And one of the ways that we want to break this down is we want to look at sectors and we want to look at groups. And this is where relative strength really plays a big part. So what is relative strength? Relative strength is plotting the group, the sector, the ticker, the stock against what we plotted against is the S&P 500. You can plot it against anything, but we're just looking to see this ratio, and then we chart out the ratio. And if the line is above the moving average, we believe this to be positive. If it's below, we believe it to be negative. So here's Bitcoin, IBIT, right? And so we can see that's definitely not a great trend. So we use the typical sector ETFs, and then I add a few more in just to kind of get a better picture of what the market's doing. Tech, so you can see tech, the blue line here, which is relative strength, is trending down, and it's below this orange line, which is the 21-day moving average. So it's not really in favor right now. And you can tell. You can see price drifting, and you can see that we are below this red line right here, which is the 50-day moving average. So below the average price and below compared to the S&P 500. So we'll just do a quick scan, and we're looking to see what's holding up. So here we have XLI. So this is one that we will mark, right? We'll look at XLI later, and I'll dig deeper into it and see what are the stocks inside of this industrials sector of the market and see what's holding up. In fact, it looks really, really good. I know the chart's like super small in this view. I can see a bigger view of it, but it comes down and finds support on the 50-day, right where you'd like it to. And also, if you look at the dotted line to the right of the black box, you can see what was the previous high, which was right here, is now support. And so this looks really good. And the reason why we want some kind of bounce off the 50-day moving average or what used to be resistance, like this point right here, which I'm going to have that line go across, that now is support right here. It gives us an idea of saying below this is no good. Yeah, energy's looking really, really good right now. So we'll mark that one down, take a little bit deeper dive in there. Gold, look at gold. I mean, gold was so on fire. You can see the kind of the end of it right here. Everybody was fired up about gold, and a lot of people bought or held. I mean, I remember talking to one person, and I was like, should we sell the silver? Should we sell the gold? And he's like, I think it's going higher, but look at it, right? So, I mean, charts tell the full story, and this is why we lean towards really a technical analysis approach, is that the chart tells you everything you need to know. Financials, look at this. This looks really good. So we'll put that on the list to look at. Healthcare, was looking really good, consolidating a bit, chopping around, but now, the RS is still popped above. So there's another one that we'll take a deeper look at. And here's oil, right? So oil is going to kind of fall into the energy. If you look at those charts there, they look very, very similar in the way they look. So, all right, so let's go ahead, and that's the broad market. That's the sector grid, just kind of getting an overall idea of what's going on. Also want to look at, a different way of looking at the market. We're going to be looking at trend, breadth, sentiment, and thrust. Trend is what it is. The market's in an uptrend, or if it's in a downtrend. We have a score of 0, means there's not much of a trend at all. Let me flip through these just to make sure they reset themselves, and then we'll go back to that. Sometimes I got to click on them to get them. Yeah, there we go. So trend is actually a -6, right? Saying that the trend is leaning down. Breadth, though, on the other hand, is a +3. That means we have 3 measures of breadth we're looking at stocks making new highs versus stock making new lows. And in order for that to be positive, the stocks have to be outpacing on the upside for like 3 straight days in a row. Then we have the percentage of stocks that are over their 20-day moving average. And if that's about 50%, that gets a point. And then we also are looking at advancers versus declining. So the number of stocks that advance versus the number of stocks that decline. We take that number, we add it to a cumulative average, and then we look at it versus moving average, right? And so that has to be above to be positive. So each one of those gets a point. So that fact that this is 3 is saying under the hood, the breadth is looking really good. The trend of the major indices is not what's looking good. We have 0 on sentiment, breaking even, no thrust. So this is really goes back to the idea that we were looking at the XMAG before, and the other stocks that aren't the big components of the S&P 500, because if you look at the top 7 stocks, like the Mag 7, I have actually no clue right this second what the percentage is, but anywhere from 30 to 45% of the S&P 500 is going to be those 7 stocks. So if those aren't performing well, it drags the indices down. It drags the market down. So it takes a lot of power from the other 493 to push the index up. So that's where we got to start looking at like different areas to see where can we actually put our money outside of just the S&P 500 type index. So looking at the trend, we have a momentum indicator, and you see momentum clearly is down, right? If we go on over to the breadth, just to summarize what I was just saying, we can see that, you know, on the S&P 500, the last day, which is of recording, is the 23rd here. You know, we're looking at 29 stocks making new highs, 10 stocks making new lows, and so we have a 19 differential there. That's bullish. Advanced decline line just popped back over its indicator line here. That's bullish. Percentage of stocks above the 20-day, 55% of the stocks in the S&P 500 are above their 20-day moving average, right? Short-term bullish. So you can see here that we really have a market that's like trying to tell 2 different stories, and that's what makes it tough, right? So let's go ahead and jump on down to another couple views of the way to look at this. If we're looking at something that we call growth versus value, so the growthier stocks in the market versus what the market would consider value oriented. So what's the difference between growth and value? Well, growth stocks have growth, earnings, revenues, things of this that are earning faster than the market. And so growth stocks are kind of usually those high flying performers, whereas value stocks are ones that, based off of that ratio of their price and their earnings, you look at it and a lot of times you just feel like, hey, this is really undervalued for really what it's doing, right? So that's the difference between growth and value. And the market swings back and forth when these are in favor. The nice thing about the S&P 500 is that it comprises both growth stocks and value stocks. It'd be kind of a tough thing to say that value stocks live in the NASDAQ. That's really a growth type of component. But what we do here is we plot the growth versus the value. So if the line's going up, growth is winning. If the line's going down, value is winning. And you can look across the board at the ratio of the mega caps, the large cap growth versus value, the mid cap growth versus value, small cap growth versus value. You can clearly see that value is winning across the board. Now, here's the individual charts. Here's the growth chart versus the value chart, right? So you can visually see also that on the actual price chart, value is winning. So you would think in your head, hey, let's look at some value. The question is, how long will value beat growth? Usually in a strong bull market, growth will typically outpace value. And value is more of a place where I mean, a lot of managers make great money in the value areas, right? But we're really looking for some hyper movement. So, I mean, you can just look at this and we can say, okay, value is a place. Value is a place to look at. So we'll look at value stocks, and we have a list. We have a list of stocks that would be value stocks. We have a list of stocks that would be growth stocks. So, depending on how this information is received every single week that we look at it, it gives us direction on where to really be looking to put the money. So we're going to strictly look at RS ratios right here. This is the broad market. These are the sectors. And before we were looking at the price chart, when I said industrials look good, financials look good, healthcare look good, this is just going to be a little clearer understanding of how do those look versus the S&P 500, right? And so here we have the top 100 stocks not doing too good, right? The NASDAQ 100, the MAG 7, right? You can see all these are red. And here we have the XMAG popping up, right? So just another angle to receive a little bit more confirmation. Here's that chart that we actually looked at before, which was the XMAG, where I said, hey, that looks pretty good. So it looks like under the hood, stocks are doing good. It's just really some of these big dominant mega caps, and then some of the AI ones aren't. And we'll look at some AI stocks too that have really sold off. And MDY, right? So we know we should be looking at XMAG, MDY. Now let's look at the sectors, and we can see tech, right? This doesn't look as strong as, say, industrials, right? You have tech with a big run here versus the S&P. Now it's underperforming the S&P, which is even worse because we know what the S&P looked like, right? We were just making fun of the S&P a little bit because it's being, pushed down. But industrials looks good, so there's confirmation. Energy, right, looks good. There's some more confirmation. Financials looks good. There's some more confirmation. Healthcare looks good, more confirmation. So, and real estate, we don't really mess with too much as an area. It's just nice to know, but we usually don't dig into. It's real estate ETFs. A lot of it's REITs, not really our type of investing. And here's oil. So this is telling us the same story as before. So our next part of our job that I'll do is I will look at the stocks that are inside of each one of these areas, and we'll find the best looking ones. Let's go ahead over to the group ratio really quick. And we have 100 plus ETFs in this view, and each one of these is a group. So the difference between a sector and a group is the market can be kind of divided into, in our opinion, 13, 14, 15 different sectors, different areas, right? But then those areas can be subdivided into groups. So when you look at all the different groups, all in each one of those sectors, really the market, in our opinion, can be divided into about 100 different groups. So we look at that same thing. We look to see what area of the market, even on a smaller standpoint, might work to dig deeper and to look and see what kind of stocks can we get into based off of even a smaller area of the market. And you can see right here, oil and gas EP, oil and gas EP again, commodities, oil fund, all at really the top of the list, right? So we'll go through these and we'll look at them, and I'll pick some out. Now I've spent a little bit of time already looking at this, and so some of the ones that really kind of makes sense to kind of look at here is IEO, right? The oil and gas EP. IAK, we're going to look at insurance, because look at that on the relative strength right there. KIE, the different company, same type of thing, but sometimes these have a couple different listing of stocks in it, so we want to kind of cover the whole thing. Let's kind of go down. Here's this is steel. So if I click on this, just it's okay. Not sure I want to dig deep into be investing in steel this week. ITA, popping up right here, aerospace and defense. And it looks pretty decent. Looks like a base. Looks like it came down and it's turning back up. See if there's anything in there. XHP Pharmaceuticals. Okay. Look at this. This is a beautiful chart. This one will be on the list. And we have Eli Lilly, which is actually inside of XHP. So I think we already have the dominant player there. IAT Regional Banks looking beautiful. So that's another spot that we really want to maybe take a look at. XHS. Now, I do scroll through and I look at most of these, even though I'm skipping around a little bit here. Healthcare services, we've talked about that. So let's think about this, right? We have the intermediate trend and an uptrend. We do have the short-term trend of the S&P in a downtrend. We've discovered that the XMAG, which is the 493 stocks, not the MAG 7, is looking good. And it's really the MAG 7 that's falling apart, that's pulling the index down in the short term, right? So some crosswinds there, but we've defined why. Then we went to the sectors and we saw healthcare sector. Now we're looking at a group inside healthcare services, right? And look how good this looks. It's a beautiful pattern. What we look for is we're looking for a move up. Now this is a big move up, but we're looking for a move up. It's about 36% move up. And then we're looking for some sideways action, some consolidation. And we want to see if it finds support and then turns back up. So we'll look inside of healthcare to see if that's a place where we need to be investing. And then the other one that really kind of IBB, right? And this also falls into, this is biotech, right? So this also would be like LLY, Eli Lilly that we already have, but that looks like a really good pattern. We have XBI in our ultra aggressive portfolio. XBI is a similar fund to that, just a little bit different. All right, we're gonna look at some themes really quick. We're gonna look at the 1 week performance, and we're just gonna kind of take a glance and see what themes are really working. We can see over here energy, the theme, oil production, refining, thermal, nuclear, and utilities look like they're popping back up. Here is aerospace, drones looks pretty good, so we might want to look at some drones, missiles, weapons, cyber defense plus 6.09, space tech not that good. We'll look at SpaceX so you can see how that's completely fallen apart. Weapons, aviation, memory is still a thing that's going good. We can also look at the S&P 500, and here's a really good representation of what we've been talking about. These are based off the size of the weighting in the index. So inside the S&P 500, you can see NVIDIA, Apple, Microsoft, Broadcom, AMD, MU, Google, Meta, Amazon, Tesla are really the big names inside of there. I mean, if you kind of visually can look at this, that's a big percentage of the S&P 500, right? And if we come over here, we can see basic materials. Here's that real estate, just a little small. So these things can just go crazy, lightning, like lightning, but they're not going to push the index that much. Now you can jump in there and do some individual investing, but when the money moves out of kind of the big names, that's when the index falters a little bit. So it's good. It's tough, but it's good because even though the index is going down, we're not crashing, right? So you need to feel like, okay, we're just digesting and strength will come back to the market. If it was a problem, then all this would be all red for a long period of time because money would be leaving the market and going to cash. It's just rotating around. While some of the ones that have moved, these huge percentages are taking a break. Now some of the other smaller names are kind of getting some love, right? So let's go ahead back over, and we are going to go to Market Lens. And everything you're looking at here, except for the theme chart, this is actually from FinViz. But all the other stuff that we've been talking about, these are all proprietary tools that we built in house. Even this charting software you're looking at, the only company that uses this charting software is us. This is software that we built in house to help us be able to do what it is that we do. So, by the way, at this point, I've now looked at a couple other proprietary methods. I have algorithms and code that searches the entire market, the New York Stock Exchange and the NASDAQ specifically. When I say entire market, that's the universe that we deal with. 8,000, 7,000, 6,000 different stocks. And we have parameters that we type into this code, and it gives us back stocks that fit these parameters. Like things like they have to be over $1 billion of capitalization. They have to have 150,000 shares traded on average a day. So there has to be some liquidity there. They have to have an ADR over 3.5%. So their daily move needs to be able to move 3.5% because we're looking for something that moves a little quicker. And there's a bunch of other components. And that comes up with a list of a couple hundred stocks, and I scroll through those, right? And I've now already done that. And so I've narrowed everything down, including what we just did. And we looked into healthcare, we looked into industrials, we looked into defense specifically, looked into some oil and gas specifically. And between all that process, I've nailed it down to 50 stocks that we really want to take a look at, that we want to keep our eye on. So I'm just going to flip through those with you right now, actually. And so we're just going to look at the charts, right? And so you'll notice a very common theme in these charts, and that there's an uptrend that's already established in most of them. And they hopefully are built a little sideways or consolidation. If they haven't, we're going to wait for that to happen, but we want to keep it on our radar, right? So these are the leaders of the market, right? And so we're going to flip through. I mean, this is a beautiful pattern, right? You can see that this thing has an uptrend. Now it's kind of high right now, so this needs to consolidate, and we need to see if this will turn back up. But moving from 150 to 240, that's a huge move. I don't know percentage off top of my head, but it's consolidating. It's shook out. Now we'll see if this thing wants to go for another run. Apple, it's looking really good. Out of all the Mag 7, it looks the best to me. And you can see kind of what, and the reason why is because they didn't spend a lot of money on the AI CapEx. They are going to let everybody else do all the research, spend all the money, and then once the winners are, we know who the winners are, like which products and services are best in, I think Apple's then going to come in and scoop up contracts with them. They'll make their money off of pushing the AI through the App Store, right? So they didn't spend all their money on research and development. They're just going to use the other people's. And so that's why they're kind of winning right now. And this is a good formation. Deere was one of the ones that we got from the industrial sector. And so nice formation here. This is actually inverse head and shoulders. So here's a head, a shoulder, a shoulder. It's a bullish pattern. And we're looking to see if this can kind of come up, create a little bit of a tail. Doesn't go all the way down to this level, but creates a tail and then turns back up. So we're keeping that on the list. Some of those insurance names, I think we touched on insurance when we were in the group grid, the RS. But if we didn't, it's one that I looked at. And so look at Travelers. I mean, how about an insurance company going from 290 to 390? I mean, that's 30%. That's going straight up. So we'll see if this wants to kind of come down and kind of base. It's too high to buy right now. BJ's Restaurant, that stock looks like it looks good. We just need a brief pullback. And here's one, United Airlines. This is probably the best airline, in my opinion, the way it looks. We can have this sideways formation. It broke out of these highs, came back and retested. We'll see if this thing is ready to turn back up. We'll keep an eye on that. Intap, I mean, this one looking great again. Chubb is another insurance name. They do high-end insurance. You know, here we have previous resistance and now previous support turning back up. We'll see if that wants to create another little handle down and then turn back up. Okta, cybersecurity name. We saw on the theme chart, cybersecurity was a big theme. WAB, air brake technology. I just put this one on. I found this one in the industrial sector that we looked. I mean, that looks pretty amazing. I mean, too high to buy, but we'll keep our eye on it. GE actually looks ready to go, to be honest with you. It had a kind of a high wick here, so they did sell it down on Friday, but that one looks like it's possibly ready to turn up. Snow, we've been keeping an eye on this. This is back to the tech sector, but tech stock that's holding up well. Eat, these guys, I think they own Chili's. We'll see how this forms. D-Dog, another software name, still holding high, bouncing off the 50-day. This was a strong mover from $125 all the way up to $300, right? So we'll see. I mean, when you move that much, you're entitled to some consolidation. And some of these are just these are some of the ones. These are some of the healthcare names. But look at the ADR, 2.4. And I said our ADR minimum is like 3.5. So when we're having to put names in here that are, you know, slower movers, that's where it's like, do I want to put money into this? Where, you know, it looks amazing, right? But really, this is only when we're looking at stocks that do 100% that look like this, and this one has done 190 to 250. It's done 20%. And so the question is the risk worth it? Because it doesn't have to do this. It can just kind of roll over and turn down. So can I make enough on the upside to justify the risk on the downside? Victoria's Secret, I don't know why that chart is smaller, but it actually looks pretty good. VRTX, pharmaceutical, Eli Lilly. So this is one we have. So out of the pharmaceuticals, out of the biotechs that we've looked at, we've seen, what looks best is actually the one that we're already in, right? Eli Lilly looks really good. In fact, it turned back up here. And has an ADR of 3.2. Okay, so regional banking, I like this ETF. ETFs are slower than stocks. But, you know, this is looking good, like it wants to turn up. IAT, here's another regional bank ETF. IHF, another ETF. This is healthcare providers. Looks really, really good. So maybe the ETF makes more sense than the individual stocks. First Commonwealth Financial, we pulled this out of the regional bank ETF when we looked at that group. Looking good. Slow mover though. CRS, Street, Rook. Cake. This is one I've had on my radar for a while now. Really was looking at it back here, but it's still moving. Zions, we pulled this out of the ETF, the regional bank ETF. Not too bad. Okay, looking really good. Tech stock, $23 to $42, right? So, $66, sorry, $64. So a triple, a pullback, head, shoulder, shoulder, inverse head and shoulders, a bullish pattern, waiting for it to kind of break out and move. CNK, net, a tech stock that looks like it's trying to hold above this resistance. We'll see what that one wants to do. CrowdStrike, we have this disappointing pullback after a very nice formation right here, but we're giving it some room. See if it stays above the 50-day moving average. Dell, been really a wild mover. This one's at 6.9 ADR, so I mean, even a fast mover, 7% a day, right? Cat, here's something that looks really good. Pulled this out of the industrial sector. 3.9 ADR. It's a mid cap. Nvidia looks like it's basing, but really basing forever, right? Might be ready to go though. ATI. XBI, this is the one we have. We looked at the IBB biotech ETF. Goldman Sachs, we have this one. Nothing wrong with it. Frog software name on our list. GEV, nuclear energy type thing. Guardian Health. Okay, Lucid. Looking to see if this thing is ready to turn back up. It's usually very messy to buy off the bottom like this. We normally don't do it, but it's one of the ones I have on the list. And here's SpaceX. I mean, look at how horrible this is. Everybody who bought, the thing I bring this up is there's so many people, all the clients calling, can you get us into SpaceX? Can you get us into SpaceX? And I said, no, we're looking for a certain formation. So that formation for us is an IPOU, and we bought it right here, right? So we waited for it to come up, it come back down, turn back up, very typical pattern. And then it lost steam, so we got right back out of it. And look how much further it's dropped. And in fact, it's just like trending down. Hinge probably needs to get kicked off the list. Sezzle. AMD looks good. We have a position in this. See if that wants to turn up. Hood was looking really good, but really just kind of falling apart. See if it holds the 50-day and wants to turn back up. STX, we took a position in this, feeling like we got kind of played a little bit on it. Looked like it wanted to go high wicked, came back down. We just got to give it a little bit more room, but that was on the verge. And these two look pretty much the same. This is Western Digital and Seagate. MU, the biggest high flyer, it's on watch. But it has to get more stable than what it is. This is an IPO that we've been watching. I don't have it drawn here on another charting software. I have a line drawn. And it looks like it might be rounding off the bottom. We want to see if it wants to come back up. We got our eyes on it. SanDisk, of course, the biggest mover. September of last year was $70. Went all the way up to like $2,300. All right. So that's our look at list for the week. And we have a bearish market condition. The intermediate trend is bullish, just to review. The short-term trend is bearish. Value is leading everything. The RS ratio, we talked a little bit about XMAG. We talked about industrials. We talked about energy, financials, healthcare. And you can see we are below the 50-day moving average on the S&P 500. And if we can get some strength back in the Mag 7, we'll probably see that turn back up. We'll have to see how it goes. That was a little bit longer than normal. Just kind of wanted to give you more of the entire process that we take when we're dialing things down and how we're looking at things. That's what I got for you this week. Once again, we'll be right back at it on Monday. Take care. Have a wonderful weekend.